Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of Brent crude oil and spot gold.
ICE Brent crude oil futures. A reactionary bearish harami and outside day on Friday after the previous session's bullish white soldier. It was still, nevertheless, a fourth consecutive clear close over all the moving averages since late April and the 50% Fibonacci line of the September-December 2022 move at 84.99. Though prices did penetrate on the downside. It was also a further attempt at the changeover gap from late April, originally between 85.89 to 87.46, but it wasn't filled in by much, and we still have the October 2018 high overhead at 86.67. More importantly, it was also a seventh consecutive close over the dark blue upper trend line, currently at 81.09 of the April to June bearish expanding wedge pattern. And taking a step back for a moment, in very early May, the market broke down below the bright red highlighted December 2023 to late April 2024 lower bull channel line. And this gave us some potentials below for this pattern. A primary target in the 78 even zone was reached, but the secondary hard reach target X2 down in the 72.30 zone, that is still alive, though I'm increasingly debating whether to retire this potential target given the recent break higher. Additionally, we had a mid-March to end of April head and shoulders top with a purple neckline just above the market, currently 87.33. This, along with the October 2018 high 86.67 and the 50% Fibonacci line of the November 2020 to March 2020 move at 87.41, these together provided the next resistances on any attempts to fill in the overhead gap. However, that is not the end of the matter. You see, the break higher from the dark blue bearish expanding wedge pattern gave us some potentials topside. Thus, a primary target X would be in the 89.45 area, with a harder to reach secondary target X1 up in the 92.05 area. Again, this is not all you can see. You see, I've been studying the action since April quite closely, and what I had initially thought might be a bearish halfway hesitation has morphed and developed into a late April to date diving board pattern, which goes a long way to explain the cause of the recent bullishness. And finally, we are set up this week to make the month of June a possible monthly key reversal. Thus, there's a story behind this. Thus, if we have a close on Friday, the 28th of June, either over 87.86 or under 81.62, and then went beyond. But right now we are looking at a possible lesser outside month pattern, and it will continue to do so unless the top side gap is filled in between now and the weekend. So far today, a lower open, a dip below the 50% Fibonacci line at 84.99, but it has not been sustained. And we're back up over it again. Below this 50% Fibonacci line, we have the declining short medium moving average, currently 84.37, and the long moving average, currently 83.74. Spot gold. A combined key reversal down and bearish engulfing pattern on Friday, with a significant close down below the breached but seemingly repaired bright red lower time, currently at 23.32 of the early October 2023 to mid-February 2024 bullish Andrews pitchfork, plus also the green highlighted short medium moving average, currently at 23.43. This market continues to ask questions and offer few answers other than the original big old bright red bullish Andrews pitchfork. So far today, a small reactionary move up again, but capped by the bright red lower time. By no means can the recent drop be seen as a decisive move. That's Friday's drop, that is. It's not decisive in any way at the moment.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.